Hi, welcome to the Market Alert for Tuesday, the 6th of February 2024. So bonds, bullion, banks and Bitcoin are battered as good news is bad news once again. This resurgence in economic animal spirits should be no surprise. As I mentioned before about the second wave of inflation, like all bull markets in any market, there's always a spike, then there's a pullback, and then there's another move back to the upside, so no surprise really. Stocks and bonds fall on hot data and more hawkish Fed speak. Obviously they can't raise rates, so that's going to support the dollar, batter the metals, and we'll just have to wait and see what Powell does come March. I mean, of course the narrative can change by then as well, because we've got all of the economic data to go through this month as well. Speaking of economic data, today there are just two economic news items. We've got construction PMI, and the FOMC member Mester is also speaking at 5 p.m. So it'll be interesting to see what he said. He's not a big shot at all in the Fed, but it only takes one of them just to say something out of hand that they're not going to raise rates, etc., and that can spill over into the markets as well. So let's move on, have a look at the markets, and we'll kick off with the Dow. So in the Dow yesterday, the market down and up on the overnight there that you can see at the moment. So what started out as quite positive in the morning ended the day on a negative note, but a bounce off the low, which was a bit of a positive there. It needs to get back above the 5 MA if it's going to go on and continue to make the all-time highs that we've seen of late. 38,782 is the all-time high. In the 30-minute chart, as I said, we kicked off on the upside on the overnight markets, and then it just ran out of steam, and the rest of the day was sent to the downside. But then, like I said, we got a bounce back up above the 200 MA there, the black line, and then to the 50 EMA. Market sideways overnight and sitting above the close. The break below the close, we'll see the market test yesterday's low. The key here for the Dow is to get back above the DP, and that 50 EMA and 200 MA. And then on the upside you've got the R1 and the high of yesterday morning as well, which obviously now is noted as an area where selling came into the market. In the German DAX, we've got a bit of a sideways move developing here, haven't we? So the market's become sideways, and yesterday the low was taken out, but the market overnight has opened from the previous day's close and moved up. So we can see just from the daily chart we've got some sort of support from yesterday's close. However, we've got to take out the high, and then we've got Friday's high, and then the all-time high, which came in on the 1st of February at 17,032. As the market moves back to the upside as well, you've also got to contend with the 89% retracement at 17,004, and 17,004 was the previous all-time high, which is interesting to see there as well. So if I just draw this across, I'm sure this was 17,004, maybe just slightly higher. That 16, well, it's the one before then. I know that the 4 level dominated the market for a while. There it is. I knew it was in there. So yeah, it's this one here for the 29th of January, and so that 17,004 ties in with the 89% retracement of the range of this bar, because there's no other one to draw to actually put in a fib retracement. So yeah, 30-minute chart, again in the pre-market session everything was quite healthy. We moved to the upside when the cash market opened, but by mid-morning the markets deteriorated, moved lower, and you can see trading down to the S1 before finding support, coming back with the Dow to the previous day's close. And speaking of the close, the market opened quite nicely at the close of yesterday. It's traded up to the psychological level there of 16,950. I would have thought it is indeed. So the market's got a lot to do to hold. We've got the DP, the close. We can see overnight the market's starting to move below the averages. 200 is going to be important. That's the more or less horizontal black line there. The DP will then take effect if the market struggles at the 200 MA. Then there's yesterday's close, which is important because this was an area where the market opened up overnight. So again, you can see already just being slammed down there as I actually record. One way to have a look and see where the support is to go from this low here to this high and draw in some fib retracements. So let's just do that and draw those in. So we're looking at 16,906, and then you've got the psychological level of 16,900 there, where the market will need to hold. Let's move on and have a look at the S&P. In the S&P, still looking the stronger of all markets, trying to move back to the 5-bar moving average. That's the magenta line. And then we've got the high of yesterday and Friday's high there. Yesterday, the market trading sideways, taking in the non-farm payroll numbers from Friday. And then when the cash market opened, there was obviously a lot of selling to begin with. But the market soon reversed and moved back to the upside. Same thing, got to stay above the DP, the close of yesterday, and the 20 bar and the 50 EMA there. Meanwhile, in the FT100, the market again also showing a sideways move, and the market trying to get back above the 5 EMA. Yesterday's 5 bar moving average, not an EMA. And yesterday the market taking out Friday's low, which is interesting, which you'll see there in the 30-minute chart. But of course the market responding as it always does at the low if it can, with the climatic volume bringing the market back. But earlier on in the session we had a move to the upside. Then once we got to 8 a.m. we had another move, but then it all turned south, and then the market overnight is similar to the DAX, coming off the close of yesterday, trying to move higher and holding a bit better than the Dow, because we saw that starting to move quite fast to the downside as I'm actually recording. US dollar continues to be primed to the upside, not just because of the hawkishness, but also because of the war situation that is developing out in the world as well. So no surprise there whatsoever. Maybe worth redrawing these Fibonacci retracements up to the next high to the left, and the next upside target would be 105 as far as I can see there. We're already through this resistance to the left, so 105 and then 105.64 up here. So if the dollar's going up, it can mean only one thing, and that's the metals are under pressure and moving lower, and they certainly are. We've had these numbers drawn in, and if we break the 21.86, then we're going down to $20 an ounce. Considering the dollar's move at the moment, the metals are holding quite well, and again I'd put that down to the obviously the geopolitical instability that we have at the moment. So again, maybe not selling off as much, but certainly watch the 21.86 level. We are going to go down and look at that, no doubts about it. We did it the other week, and as I mentioned before, the lower they can move this price, then they're going to continue to do it. Yesterday, the classic London fix, the market sold to the downside, then recovered after the traders had made their money on the short side. And overnight in Asia, the market spiking up a bit, but it's already been hammered by the overnight traders back to the downside. Watch the low of yesterday, it's likely to be taken out, and $22 tested as well. In the gold market, stuck in the sideways range, we came down and tested the 89% retracement that I spoke of in yesterday's market alert. We're trying to get back above the 50 EMA, the 20 and the 5 at this time of recording. In the 30-minute chart, a more detailed look again, we've got the LBMA slam market moving up off this, and overnight again following a bit of support in Asia, the market is now being moved to the downside. If it takes out the daily pivot and the close, then we can expect the low to be tested as well, certainly around the 1 p.m. manipulation time when the fix is made in London. And in the gold-silver ratio, as I said several days ago, we're going back up to 92 ounces of silver to 1 ounce of gold. It's absurd, but it is what it is. There you can see prices being moved up there. We're at 90.56 on the overnight, but I expect this to quite easily go back and trade to a double top in the gold-silver ratio. Now let's have a quick look at the trades for yesterday and also the overnight of the German DAX. So yesterday morning, the market spiking to the upside. That happened when I was recording yesterday's alerts. The morning session, the market opened higher, then traded sideways. Again, we've got this classic thing that's going on at the moment in all of these stock markets. We get more movement in the pre-market and after-market than we're getting during the actual official cash traded times. And very, very strange. I don't know whether they're spending a lot of time during the cash market session trying to hold the market up. It's what's known as distribution, where the market, if it starts to sell off, then they bring it back like you're seeing now. So they allow the sale of some of the shares, and then once it gets too low, they then start buying back. Just set the algorithms up to do that, and then all the way through the morning you can see then it's churned back to the downside. This time there's obviously something a bit more bigger hitting the market. The market goes to the low, and it tries to hold at the low there. No surprise there. They don't like to take out the previous day's low, as I've said so many other times. And then the market comes back. We have the ISM numbers out. They're not good. And the market then puts in a sell, with the market then taking out the low, which found support previously, and moving down for a 28-point profit when the market closes back above the S1 level there. So a nice move to the downside in the afternoon, and then once again we get an 89% retracement. No surprise there, before the market then starts to move back to the upside, as you'll see there. So back through the low, and then continuing on through the evening session there. So that's it for this alert. Just a quick look at a bit more detail in the 2-minute chart. While I'm thinking about it, we saw the sell-off in the 30-minute DAX when we were looking at it. This is what happened. We traded down towards the DP. There is green inside of this bar, which indicates that the shorts who had this move to the downside have now bought back and liquidated their short positions. Need to get back above the 200 MA, the 20 and the 50 EMA, market back above the 5 there. In the daily charts, the market again is sideways, but I'm just going to go back to the 2-minute. Maybe before I forget, just want to compress the chart so that you can see where yesterday's high was, the R1, the low, and the S1. And you can see how important the close and the DP are going to be today, because that's where, when the market opened last night on the electronic session, where the support came in and the market moved up from. So at the moment, we've had a bit of a shakeout. We need to get back above the 200, the 20 bar, the 50 EMA. If not, then we're going to see the DP, the close, tested, and then this psychological level, which will be 16,900, 16,950, and then we get to the 17,000, which is a major psychological level for the market. Okay, that's it for this one. Let's see what happens during today, but as ever, thanks for watching. See you in the next.